On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. Before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. G'day team, hope everyone's feeling good. Boxing Day today, so maybe a few of you hungover, a few people overindulged, maybe ate too much. I won't be one of those. I'm very sensible these days, so I'll be feeling fantastic on Boxing Day this year, as I'm sure I am as you listen to this. But today I wanted to just talk about inflation. This is something I feel I've written about and talked about non-stop over the last 5 years because it's been a really important topic and it's had huge implications on asset prices, interest rates, share market returns, and the cost of living. So there's one key point that I want to make that a few people still get wrong or don't appreciate as much as they should. And I know you're all very intelligent. If you listen to this podcast, you're definitely in the top 1% when it comes to intellect, but I'll remind you of it anyway, because there might be family members or friends or colleagues that it's important to share this with. And I guess my point is that even though inflation is largely under control, it's not dead and buried, but it's at least well contained, that doesn't mean the cost of living crisis is over, okay? Here is why. Let's talk about inflation rates. Here in New Zealand, our inflation rate's sitting at 3%, right at the top of the range, so only just there, but that's a whole lot better than 7.3%, which is where it was at in, I think, 2022. That was the highest we'd seen in more than 30 years, highest since 1990. Same story in the US, they're at about 3%. They got to 9.1 a year or two ago. That was the highest we'd seen since Ronald Reagan was in the White House in 1981. Europe and the UK, they're in the 2s and 3s, but they were double digits, north of 10%, the highest we'd seen in a very long time. So inflation has come down everywhere, and now we're at 3-ish%, which is a whole lot better than 6, 7, 8, 9, 10%. Now that's great news, but it does not mean that the cost of living crisis is over, because here's the really key point. Lower inflation doesn't mean lower prices. Okay, I'm looking at a chart right now and it's got 2 lines on it. I'll put it on LinkedIn, so go there if you want to look at it. I'll make sure I put it in the diary to do that later today, Boxing Day. One line is the CPI, the New Zealand headline inflation rate, and it sort of goes sideways for the best part of 20 odd years, then it spikes right up to 7.3%, and then it comes right back down to earth, and it's sitting at sort of 2 or 3% now, and expected to sort of be around that level for the next 2 or 3 years. Great news. But the other line is the level of prices, okay? And that line goes up the whole way through the chart, okay? All that changes is the steepness with which it goes up changes. So when you see the first line spike up to 7.3%, the other line goes up more steeply. And when the first line then comes back down to 3%, which is where we're at today, the other line, the second one, the level of prices, it's still going up. It's just going up less steeply. So I guess that's the point. Inflation is just the rate of change, right? So high inflation worse because of the rate of change is higher. Prices are going up more. But when inflation comes down from 6 or 7 to 2 or 3, prices are still going up, right? They're not going down and they're not stagnant. They're still going up, but they're going up at a slower pace. And that's something that we've really got to understand and appreciate. We're in this more normal environment in terms of inflation, sitting at 3%, hopefully coming down into the 2s, but prices are not going backwards. We are still stuck with those high prices and those increases that we've seen through 2021, 22, 23 and 24. So the insurance bill, the rates bill, all of the rest of it, those are still stuck at those high levels. And even if they're going up at a slower pace, one, they're still going up, and two, we're stuck with those increases. So it's a bit like a ratchet system, because it goes up but it never comes down. It either goes up or it sort of stays flat. And that's kind of where we're at. And we've just got to understand that lower inflation is great. It means the problem is contained, but we're still stuck with the impacts and the cumulative effects of that problem over the last few years. So for that reason, even though I think the economy will recover into next year, 2026, and we can be happy that the Reserve Bank has done its job and got inflation under control. Yep, there were some consequences. We all understand that, and many of us feel them in our daily lives, but we've got inflation back to where we want it to be. But prices, we are still stuck with those higher prices. So just remember that lower inflation does not mean lower prices. It just means the rate of change is more moderate. So for that reason, cost of living crisis, for many of you, I bet it still feels like that is upon you. Lower inflation doesn't mean lower prices. We are still stuck with the cumulative impact of those price rises from recent years. So I don't think the economy will shake that off immediately. We are due for a more prosperous period, and that's good news, but there are still some of those lingering impacts. And I think you could probably say that for any part of the world. It's the same across the Tasman. It's the same for parts of Europe and the United States. That is the thing with inflation, and that is why central banks will work so hard to get it back to where they want it to be, because its effects will continue to impact people's lives. So hope that is useful. Enjoy the rest of your day, team, and we'll talk again soon. Thanks for listening.
For more insights, visit craigsip.com.